Hello, you're watching World Talks on TVP World. My name is Sasha Farba. The United Nations Security Council is preparing to vote on a Bahraini drafted resolution that would authorize defensive measures to secure commercial navigation through the Strait of Hormuz, which is a key shipping route for roughly 1/5 of global oil supplies, disrupted by the ongoing Iran war. Now, despite weeks of heavy strikes, U.S. assessments indicate that Iran retains significant missile capabilities that complicate efforts to stabilize energy flows. Now, oil and gas markets have responded with continued price pressures amid uncertainty over the Strait's reopening. Now, let's discuss the latest. And for that, we're joined by Sławomir Raszewski, Senior Oil and Gas Lecturer, University of East London, to discuss more. Good to have you back with us.
Thanks for having me, Sasha.
So, we've covered this before. We've talked about how this could be. Let's look at the past week and where this could all go. Fluctuations in oil prices, Brent, way over 100 at this moment in time. Will it get worse? Will it get better? What's your immediate assessment from this week?
Well, absolutely. We've been discussing it, and indeed, situation has been deteriorating. I suppose that's the short response, is that it will get worse before it will get better. At the moment, there's a lot of uncertainty what comes next, and it's largely in response to the address to the nation by U.S. President Donald Trump, which essentially did not reassure the markets. U.S. President, in his address to the markets, to the nation, said that the conflict will continue, essentially. So if the conflict continues, it means that the disruption is likely to continue. At the moment, we have seen, that's the most recent information, we have seen increased transit of oil through the Straits. And in fact, the largest amounts of oil have been moving through the Straits, up to 4 million barrels per day. However, if you compare this with what we had before the conflict, it is just a tiny fraction. It's only a tiny fraction of the 20 million barrels of oil that used to flow through the Strait. So obviously this is not very reassuring. It's only sort of a short-term measure. But indeed, the traffic overall has gone down from 150 to kind of 5 per day of tankers. That's what the Secretary of State of the UK mentioned. So we really are where we are, and the reality is that the market is very tight and is becoming a bit tighter. We already seen this in Asia, and this, if you like, the tide is now probably going to come in the coming weeks to Europe.
Mm-hmm. And speaking of Europe, and we've had now also a certain level of price caps. For instance, in Poland, the Polish government has stepped in to try and protect consumers. Now, that's a temporary measure, but I'm just curious on your view, how sustainable that can be. Will other European countries follow, and how that impacts the markets and oil particularly?
Yes, the consuming nations who do not produce oil, or who produce oil in sufficient amounts, have stepped in with fiscal measures. So there's been reduction of taxes. There've been reassurance of markets and consumers. But let's understand one thing. This is obviously the response to the rising prices of the refined products, because there's been an unrest in various places. People are not sure how they are going to continue with their businesses. But ultimately, what has the ultimate impact is the flow of the crude oil to markets. So in the long-term perspective, the question is of the flow rate and increasing the flow rate to markets so that the oil can be refined into products. So yes, this is the measure to respond to the prices, and indeed it is going to probably have impact on the economies. But ultimately, it's about bringing back the flow we had before the crisis.
Mm-hmm. But also speaking of flow, what we've already observed, and I'm just also curious to get your sense of it, is we'll have with this price cap, at least in Poland, better petrol prices. How, let's say, if more people come from Germany, the Czech Republic, Lithuania, do you see this as a spike, how that could impact Polish markets? I mean, if I'm thinking back a few years ago, the Hungarians tried to only have this for Hungarian consumers. That was pushed against by the European Union. How do you see this play out in the next few weeks here in Poland and Central Europe?
Well, precisely. I mean, introduction of caps is going to help the market, but at the same time, we may witness the fuel tourism across the border. So that will have to be in place in every nation, because let's not forget we're talking about the common market within the EU. So obviously, any changes in one place may have impact on others. So I would say this would need to be coordinated across the EU. But obviously, this situation is very dynamic, and it probably, most of the people are probably still hoping for a resolution to the bigger crisis, if you like, the flow rate crisis, rather than the crisis of prices. But what is very concerning is that there is a very big spread between the prices of diesel and petrol at the moment on the markets. And, diesel is very important, particularly in this time of the year for agriculture, but obviously for transport. Diesel is consumed by transport, and obviously this also have ramification on the prices of goods and manufactured products, probably. So, going forward, I think this price cap is an important measure taken by Poland, but obviously this would have to be consistently applied in other European countries which are part of the common market.
Speaking of other European countries, I mean, the Energy Commissioner earlier this week said, essentially from the Commission, that recommending, if we translate his words, that Europeans have to tighten their belts, likely, that they have to travel less, that they should stay home. So given what we just talked about with this price caps, with fuel tourism into Poland, I mean, that looks like it could get very dicey. So how do you assess it? Is there enough supply? Will there be queues? How bad could this get?
Well, obviously, this is a very dynamic situation. And, I believe that the decision makers in Europe are in a difficult situation because, if you look at the grand scheme of things, we don't know exactly where we're heading at the moment because there's so much happening in terms of the US, in terms of the Bahrain initiative. So I think we're probably trying to address the short-term security of supply at the moment. So at the moment we are still in this mitigation stage. What to do while this conflict continues, and hoping that this conflict is going to end very soon. So these responses are attempting to. There is an attempt to address the short-term security of supply, but the ultimate question is what is going to happen with the long-term perspective. So beyond the next month or two, is this conflict going to end? Are the flows of oil going to be back to the markets?
Mm-hmm. And I think, as you said last time we spoke some days ago, you said even if this does end very quickly, it would take quite some time. The infrastructure is damaged, having those flows return to normal. What about alternatives? I mean, there's this idea of looking at new pipelines across Saudi Arabia, maybe, focusing again more on nuclear, other alternatives. I mean, how realistic is all this, and how quickly will that, let's say, offset these price pressures that we're feeling right now?
Well, the past crisis obviously is not comparable. From the 70s can give us a glimpse of what states did at the time. And at the time, states decided to change their ways. If you look at France, for instance, or Japan, these two countries dramatically changed their energy mix by introduction of nuclear energy. So indeed, we're probably going to see such discussions going forward. But, obviously, this is not responding to the immediate security of supply issues, the immediate problems with the prices at the pump stations and the economy. This is more about planning for the next few decades, likely. So yes, you're right. When we last spoke, we said that this crisis is going to have a huge impact on the economy. The longer it stays, if it protracts. Indeed, it is not just months; it could be years. I sort of dared at the time to suggest, and indeed, it seems to me that we are now in months of impact. But yes, you're right. There is this discussion in the European Union, where to go, which direction to go. I think that the future of energy security in Europe is going to be more complexity, because on the one hand, we are now sort of trying to put climate policy on the side and focus on energy security. We're talking about diversification options, which are very limited, into fossil fuels, obviously. And then we say that in the future, we're going to accelerate the climate policy, and we're going to, scale up the renewables. I mean, is this going to happen? We don't know, because, this crisis could be much bigger than that. And in fact, it could shove the entire climate policy aside going forward, because, nations realize that energy security is much more important than climate policy as we see it now.
Mm-hmm. And as you said, Sławomir, it's dynamic, but definitely will be difficult, whatever happens next. So look, thanks for updating us on that. Really appreciate it. Sławomir Raszewski there from the University of East London. Thank you.
Thanks for having me.
And thank you for watching World Talks, but stay right here on TVP World for more news and commentary. Goodbye.